What if I told you, that the products inside your mouthwash, your hand sanitizer, your cosmetics, your medicines, all of them are made using alcohol produced by one company, a company most people have never heard of, a company whose stock was sitting at just 76 cents last year and has already gone up over 400% since then, and right now, and it's still under $5. If you're not paying attention to this stock, you might be missing one of the biggest opportunities of 2026. Stay with me, because this one is different. Most investors are chasing the same AI stocks, the same tech giants, the same names everyone already knows, but the real money, historically, has always been made in the companies nobody is talking about yet. Today, we are looking at a company that produces something that goes into products you use every single day. And here's what makes this really interesting. This company just reported its strongest earnings in years, got a strong buy rating from Wall Street analysts, and its stock is still trading under $5. Let's break it all down. So, what does this company actually do? This company is based in Pekin, Illinois, right in the heart of the United States. It is listed on the NASDAQ, and it operates in a sector that most people overlook completely: specialty alcohols, renewable fuels, and essential ingredients. Now I know what you're thinking. Alcohol. How exciting can that be? But stay with me, because this is not what you think. This company's products go into 5 major markets. First, health, home, and beauty. Think mouthwash, hand sanitizers, disinfectants, cosmetics, fragrances, and pharmaceuticals. Every single one of those products needs high-quality specialty alcohol to be made, and this company supplies it. Second, food and beverage. Their grain-neutral spirits go into alcoholic beverages and vinegar. Third, industrial and agriculture. Their alcohols go into paints and fertilizers. Fourth, essential ingredients. They produce dried yeast, corn protein, corn oil, used in animal feed and pet food. And fifth, renewable fuels. They produce fuel-grade ethanol, used as a transportation fuel additive. This is a company that quietly keeps multiple industries running. And now let's look at the numbers. In their most recent quarterly report, Q4 of 2025, this company reported net income of $21.5 million. That is a massive turnaround. Their full year 2025 revenue came in at $917.9 million, almost $1 billion. Their adjusted EBITDA was $44.7 million, and they are sitting on $29.8 million in cash with $70 million in borrowing availability. But here is the part that really matters. This company just reported earnings that were 1,500% higher than what analysts expected. That is not a typo. Analysts expected a loss of 2 cents per share. This company delivered 28 cents per share profit. That is the kind of earnings surprise that sends stocks soaring. And on top of all of this, the White House recently prepared an E15 fuel waiver for summer gasoline sales, which directly benefits this company's renewable fuel business. Government support, billion-dollar revenue, massive earnings surprise, and still under $5. All right, the company we have been talking about this entire time is Alto Ingredients Incorporated, ticker symbol ALTO, trading on the NASDAQ. And right now, as of today, Alto is trading at around $4.58 per share. Now, let me put that in perspective for you. Just 1 year ago, this stock was trading at 76 cents. That means if you had invested just $1,000 into this stock 1 year ago, you would have turned it into over $6,000 today, a 425% return. And analysts are saying it is still not done. Let's look at the bigger picture. The 52-week low for Alto was $0.76. The 52-week high was $5.05. Right now it sits at around $4.58, which means it is near its highs, but analysts still see more room to run. Wall Street analysts, 4 of them, have given Alto a strong buy rating. That is a perfect 10 out of 10. Their median price target is $5, with the most optimistic analyst at H.C. Wainwright projecting even higher upside. And here is the forward-looking story. The company is now monetizing Section 45Z renewable fuel tax credits. They just acquired a CO2 processing plant, which is expected to bring in cost savings and new revenue. Their 2026 earnings estimate has jumped 19% in just the last few weeks. An earnings season for Q1 2026 is coming up, with results expected in May, which could be another major catalyst. Think about this, a company making products that go into your mouthwash, your hand sanitizer, your fuel, earning nearly $1 billion a year, backed by government renewable fuel policy, and still available for under $5 a share. That is the opportunity sitting in front of you right now. Here is the bottom line. Alto went from 76 cents to over 4.50 in 12 months. That is a 400% move. Most people missed it. The question you need to ask yourself right now is, are you going to miss the next move too? The company just posted the best earnings of its recent history. Analysts are rating it a strong buy. Government policy is supporting their fuel business, and they are sitting on nearly 100 million in liquidity to grow further. Is this a guaranteed return? Absolutely not. The stock market never guarantees anything. But when you combine a strong earnings surprise, a government tailwind, analyst backing, and a price still under $5, that is when smart investors start paying attention. Do your own research, look up the ticker, read the financials, and make the decision that is right for you. If this video gave you value, hit that like button, subscribe so you never miss our next stock breakdown, and drop a comment below. What stock do you want us to cover next? This was purely for educational purposes, not financial advice. See you in the next one.